When I am talking to businesses at the moment and I'm talking about things getting better, and do you know what some of them turn around to me and say?
What?
The national government could be gone in 2026.
Mm.
I'm like, you're thinking about that now? Yeah, damn straight I'm thinking about that now. I'm thinking about bright line tests coming back on, interest deductibility, boom, 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 boom. It's like, ooh, that I can understand why,
Why there's a bit of worry.
Yeah.
Welcome to Checks and Balances, brought to you by Lighthouse Financial. I'm Michael Vincent. This is James Blair. And today we've got Jarrod Kerr, Chief Economist at Kiwibank, here to talk about Trumpnomics and a global outlook.
We're back in your life. Jarrod, thank you for being back in our life. I want to get straight to it. There has been a lot of talk around Trump, tariffs, what it all means. You're a smart guy, or at least you look like a smart guy.
It's the glasses.
Yeah. That's what Mike plays that game as well.
Yeah.
I'm keen to get your take on what it all means, because there's a lot out there, and people have come to varying conclusions on it. What do you think?
Oh, look, to be quite honest, we don't know. And anyone who says that they do know, I'd probably stop listening, because we've just got to see how things play out. I think when you think of Trump, you think of, very loud, very, very large comments. And I like the saying, take Trump seriously, but don't take him literally. Take him seriously in that tariffs are coming on. We know they're coming on, but, they might not be 25%. They might not be, very, very large. I think that art of the deal kind of bluster and
Anchor
what
them
we
up
do
here
get is volatility.
And then,
Say you're going to do this and end up doing that and get all the other stuff that you want.
Yeah, and a lot of that is a threat. I mean, he's said some pretty wild stuff recently. We're taking over this country, we're going to take over this canal, we're going to do this and this and this. And again, I think for people making decisions in the market, it is hard to kind of pass through what is bluster, negotiation tactics, and what he's actually going to do. And to your point before, no one actually knows what he's actually going to do. Sometimes I doubt he actually knows what he's going to do. Yeah.
No, I agree. I think he comes out with. He's got a lot of ideas that are clearly, there are people in the background that have gone, this is going to be good for the United States. And the way that he negotiates is quite clearly bang, bang. So, what we've seen so far is not overly concerning yet. When I think of tariffs, I like to think of some of the Treasury analysis that you get, and that if you put on a tariff of 10%, that's a great revenue grab, and the Treasury starts forecasting revenue on the back of that. You put a tariff of 25, 35, 50, and the revenue's not a lot. And you're like, well, why is that? Well, people actually start substituting away from that good. So what do you want to do? Do you want to boost the coffers, 10%, or do you want to hurt your trading partner, 50%? And we're figuring out.
Not being too greedy, just taking a little more margin.
But and I guess that's the tricky thing, is when you're putting tariffs on the likes of China, Canada, pretty large trading partners, that will have a global economic impact. And of course, the real risk is that this turns into an all-out trade war. The credit markets freeze. There's some pretty big downside there. What do you think the risk of that actually happening is, though?
It's uncomfortable. I don't think it's a 40, 50, 60% chance. I think it's in the 15, 20% type, but that's uncomfortable. Right? That should be at 5%. So it's definitely heightened, and it's definitely got investors, positioning for, I do like the pro-growth trade. I do want to be long equities, but geez, I want some fixed income, or I want something on the side that if this blows up, then these rally. So, and I think that's a wise way to play. I think we just position for volatility.
Yeah, and do you think the most likely outcome is we landed at around that 10% tariff number?
Yeah, I think so. I mean, it'll depend on the product and the country and that sort of stuff. But I kind of hope that the tariffs are more on the revenue generating side rather than the trade war side. But we just don't know. And it's funny. People ask me, what does that mean for New Zealand? It's like, well, actually, there could be some really bad, results for us. our biggest strength is our biggest weakness when it comes to exports. That's China. If they're in a trade war, they could hurt us or they could help us. It's hard to figure out. So clearly, trade supply chains could be quite badly disrupted or changed. The other thing which is interesting is it could actually be good for New Zealand. Like we could get EVs that are built in China, destined for the United States, that get diverted to us at a 30% discount. I was talking to the CEO of a company. I won't say what type of company, but that they are importing a lot of stuff from China right now to export to the United States.
Yeah.
So where there's a will, there's a way.
Yeah. Yeah.
Right?
Yeah, and I find that really interesting, right? Because there's always winners and losers in any outcome, and you kind of think about over the long term, undoubtedly it would be bad for New Zealand if there was an all-out trade war. In the short term, there are almost some winners there where you go, well, if we manage to duck all of these tariffs as a largely exporting company and some stock, some goods are getting dumped sold at a cut price for lack of a better term, there could be some short-term gains there. But I think overarching the theme would be, it would be bad as you shift that kind of, as the US goes to more isolationist policies, other countries will step in to fill that gap. And you're already seeing that in the Pacific with the likes of China and there and some of the countries as well.
Yeah, and there's a real, I hate to say it, sort of military feel about
they
what's
just sailed
happening.
a couple of warships past the country. Yeah.
Well, exactly, and I kind of worry about that a lot. And I think the United States are looking at themselves going, is our ammunition made in China? Are the boots that the soldiers wear and the vests all made in China? What if we do actually go to war with China? And I'm being a bit smart, but the semiconductor space, Taiwan, they do most of the world's exporting of semiconductor, and chips. What happens if they're taken over?
Because they're a lot closer to China than that or us. Yeah.
You ask a Chinese person, what do you think about Taiwan? What do you mean? That's China.
Yeah. Oh, you mean the people just over there? Yeah. Yeah, and it is a bit more of probably a macro question, but it is something that obviously like your active fund managers for your KiwiSavers are always thinking about. So it will have some impacts on the market when these decisions are made.
Yeah, I do want like the geopolitical risk piece. I've been a financial advisor for over 10 years, and there's always things going on, and there's always risk. And the thing I try and tell clients who want to make changes off the back of this sort of, whatever is happening is there's always going to be uncertainty, because if everything was certain, then, everybody would be invested in the most risky assets. And that's just part of the game. Yeah.
Yeah, absolutely. There are always threats, aren't there? And they sort of get heated and not so heated. But, there's no denying that over the last 15 or so years, there has been this rise in populism, and it comes about through severe recessions. 2008, we've just had COVID, and people who get hurt, they don't vote for the mainstream anymore. They're not voting for a centralist Labor or National. They're going out the sides, right? This is not working for me. I'm going out here. And if you look at the populist vote, it's gone up like this. And historians look at that and they go, oh, geez, the last time we saw that was in the 30s. So there are some legitimate worries about this rise in populism. Trump was the classic 2016, wasn't it?
Yep.
Wow, this populist vote's really gone, and he's back again. So there is concerns out there.
Yeah, and without turn this into a politics episode, it definitely feels like the left and the right are more divided than they've ever been. And where does that go over time?
To bring it back to markets, I
was just going to say, but that does have real impacts on people. So when I am talking to businesses at the moment and I'm talking about things getting better, and do you know what some of them turn around to me and say?
What?
The national government could be gone in 2026. I'm like, you're thinking about that now? Yeah, damn straight I'm thinking about that now. I'm thinking about bright line tests coming back on, interest deductibility, boom, 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 boom. It's like, ooh, that I can understand why,
Why there's a bit of worry.
Yeah.
It's interesting you say that. I was talking to a client the other day who was thinking about buying a business, and this type of industry is one that governments tend to make, changes around because it impacts everyday Kiwis. And they said the exact same thing to me, going, I was thinking about borrowing this money and investing into this business, and I'm not going to do it because I'm worried about.
I know who you're talking about.
Yeah, because I'm worried about that there'll be a change of government, and you go like, geez, there's always going to be changes of government, right?
Yeah.
And you've just got to play that longer term game. Coming back to Trump, I know you're not an American economist, but if we were to get you to focus on that piece for a second, how much risk do you think there is in terms of coming back to the tariffs and inflation within the States? Trump, I mean, he's got some smart people around him, but Trump getting inflation actually starting to really move in the States because of these policies, and essentially him becoming unpopular off the back of it.
Well, I don't know about the unpopular part. That's interesting, though. But I think we have seen, what the market thinks, and that is it is pro growth for the United States. So you have a slightly better outlook on the back of some of these things, which means the Fed is delivering fewer cuts, and we're already seeing that. Yes, it's inflationary, right? Every tariff is a tax that increase that's going to be passed on, right? So definitely inflationary. What has the equity market done on it? Well, it hasn't. It's a bit volatile, but it hasn't collapsed. It doesn't look like it's going to fall off a cliff. And to your point, I think people just kind of fight their way through it, but they think about the risks along the way.
And do you think that, the equity market's been going pretty strong for the last couple of years if you look at the year-on-year growth. Do you think that will continue through this year and the end of next year, or do you think that actually it's getting a bit tired? Because you almost look at the underlying fundamentals and you go, sentiment is carrying a lot of the growth here.
Yeah.
And with some uncertainty, I know Trump is pro-growth, anti-war, wants to negotiate on everything. Do you think that actually those equity markets start to become a little bit tired?
I actually think they continue. And this is not my area of expertise at all. I'm an interest rate strategist, not an equity guy. But I do think things can continue. I know valuations are getting stretched. I know, the AI type stocks potentially if you've gone too far. But from an economic perspective, the equity markets do follow economic outcomes, and we've come out of a rough patch. The US economy is still running really, really well. I think asset prices can keep going up because interest rates are going down.
I want to change tact and talk a little bit about New Zealand. One thing I do worry about, coming back to the geopolitical risk, right, is in New Zealand for the last 3 odd years, it's been pretty tough. And we're just starting to turn the corner, interest rates coming down, we're starting to see the outlook. And then, things happen in other parts of the world in terms of geopolitical, and it has a huge roll-on impact to the New Zealand economy.
They sneeze, we catch a cold.
Yeah, for sure. Do you worry about, do you worry about that?
Well, yeah, absolutely. We've got I think, quite an optimistic outlook, but as we've talked, there's plenty of risks that can derail that, and it's been very hard for the government's budget with revenue being so low with the recession, right? They see it. That in a recession, companies are paying less in tax, right? People are paying less in tax because more people are unemployed, and you have to pay more in benefits to those people who've lost their jobs. So you get hit quite hard on the revenue and expenses as a government in a recession, right? So very hard budgets to be delivered, very, very difficult. You'd much rather be in an economy with 5% nominal growth and 3% unemployment, and you've actually got some money to throw around.
The Prime Minister's fist bumping people, kissing babies as he's walking through. What about, so coming back to, the lack of taxes on companies because of profitability, government spending at the moment, keen to get your thoughts, right? So they've gone, there's two ways we can get out of this. We can focus on growth, or we can focus on the expense line. Obviously, there's been a lot of focus on the expense line, which, to get out of debt and focus in that area. Do you think the government should be, spending more money to try and stimulate the economy to move forward?
Yeah, we're in a recession. So whatever they can do is useful, right? I do like this go for growth mantra. I think it's good. Some people will point to the fact that, we've got deficits and debt levels are increasing. Doesn't bother me in the slightest. We've got an infrastructure deficit, which, is getting more airtime, more attention. It needs a lot more airtime, needs a lot more attention. It's something that I wish we would leverage up into. Like, we have the capacity to take on a lot more debt to tackle the infrastructure deficit. That there would be a great part of a go for growth strategy. Unfortunately, you start building a road today and it takes longer than the next election to be delivered, and people won't not necessarily see it. So it's tough. These 3 yearly cycles are just too tight.
I think with the go for growth stuff as well, I mean, I feel like we've seen the budget cuts. We've blamed the other government. We've done all of that. We get it. I would really like to see some innovative thinking coming out of the government around what other strategies can we put in place, aside from just, trying to knock an interest rate down, or maybe, saying, we may give you a tax break here or something. Like, what else can we actually do to stimulate the manufacturing sector of the economy, to stimulate, productive assets in the economy, instead of just waiting for house prices or interest rates to try and fix everything?
You're absolutely right. And they've got 1 year to do that.
Yeah.
They've got 1 year to do that. And next year they're in election mode.
Yeah.
So
we're back to promises.
They're going to be running fast to try and get stuff done.
It's just all about, like, and don't get me wrong, I don't want wasteful spending, but it feels like the focus is so much on the expense line, opposed to, you're right, what can we get out and go and do? You mentioned before, Jarrod, around your debt levels and for the government, and you're not bothered by those. Some would go, well, surely somebody has to pay that debt off at some point.
Yeah.
Why are you not bothered by the debt levels and potentially taking on more debt?
Because they're very low. Yes, they've blown out, right, as they have globally, but we've started from such a low level. I would actually argue we've started from too low a level, i.e. we haven't spent the money we need on the infrastructure over the last 30 years. But I'll start frothing at the mouth and my heart rate will go up too much if I talk too much about that. Debt levels, not worried. 40% of GDP, really. Aussies at about 60.
Yeah.
Right. In Australia, you would put Australia right at the top of your, strength of sovereigns, AAA rated, bang, you've got Aussie right at the top. We're not far below them. They're above the United States. United States is not AAA. Right. United States has got 100% debt to GDP. And then you look at the UK, double notch downgrade after Brexit. Yeah, they're still doing okay. They're still issuing debt, cheaper levels than ours. So I don't worry about the level of debt. I reckon we could double it. I don't worry about a ratings downgrade. That doesn't bother me. Because it wouldn't add a lot to our interest expense. Right? Theoretically, it would add 10, 15 basis points. Reserve Bank cuts once.
We're good.
Well, seriously, we have the capacity as such a highly rated sovereign, which we've earned, to really go for growth. If you wanted to, you could double the debt. You could really start up an infrastructure fund, pump money into it, and actually look at some really long-term solutions. I love talking about NZ Super, because NZ Super to me is just such a great organisation. I love the way they think. They've got a long-term horizon. There's no drawdowns until 2035-ish, so they invest long-term. Why can't we do an NZ, away we go?
Yeah, 100%.
And recently the government's come out around, how do they attract overseas investment and the investment fund. Keen to get your thoughts?
Yeah, naturally, I agree. You know, if we can attract more funds into the country, I don't think it's a hard sell. You know, we do have good foreign investment here. Over my career, I've seen a number of countries entering the New Zealand market. You know, we were pretty much had a handful of countries investing in our debt. You know, Japan's been our largest investor for a long time. Now we've got, you know, PBOC, China. We've got lots of European countries, including Germany. You know, these places that just didn't invest in us, but they do now. I don't think it's a hard ask to get money in here. Then you want to get all those venture capital type, you know, all that really cool money coming in here, looking to build, looking to grow something rather than park cash.
Yeah, 100%.
Awesome. Last one for you, Jarrod, bit of a fun one. Buzzword at the moment is obviously all around AI, and there's the AI bots coming out. As an economist, where you go, well, there's so many different things happening in terms of, you know, potentially efficiencies within business, risk around roles in the future.
Yeah.
And it feels like it's not something that's too distant into the future, but something happening now. As an economist, how do you think AI will impact the New Zealand and global economy?
I think of it from a productivity lens, and I think it could be one of those game changers. Absolutely. You know, the technological advancements that we have seen and are likely to see are incredible.
Yeah.
Like absolutely incredible, some of the stuff that we're seeing. Even the low level, easy stuff like
Get it to write me an
driverless
email.
cars, or get it to write me an email, or get it to do my accounts for me, or get it to do, you know, my essay or you know, company structure for me, all this stuff. Lawyers, accountants, it's just enhanced what we do already, and it's only going to enhance what we do in the future. All the positives of that mean, you know, a faster, more productive economy.
Yep.
What are the downsides? There are going to be industries that potentially get, you know, replaced. A lot of people potentially get replaced, and it's up to us to redeploy those resources. Right? You can't have, you know, every Uber driver in New Zealand on the unemployment benefit tomorrow because we've got driverless cars. It's happening, but what else can we do? What are some of the other industries that are going to develop? I don't know, but there are going to be more. So there's positives and negatives in that. From an economist point of view, Jesus, most of my job is looking at data, which AI can do better than me. And you ask it to provide an economic overview.
That's not bad. The job creation stuff I quite like. I love the saying, just to wrap it up, which was, you try to explain to a medieval blacksmith what an HR manager does. Like, you know, the technology will change, jobs will change, functions will change. You can't even think of the jobs that'll be around in 50, 60, 100 years.
And Michael actually confirmed, 10 years ago, we were at bars at 2 a.m. discussing whether tech would take our jobs, and Mike, what did you say? We'd be French speaking beekeepers.
I was at where was it? Black's Club in London. I can't remember who it was, and they were like, if you fast forward 100 years and you don't have to work, what do? Leisure becomes your work, right? So like, you might go learn French, you might keep bees, you might do something. Anyway, we're so far away from where we started.
Yeah, but I am just to finish up on the AI side. Do you think unemployment will, like, say we go between like 3 and 5% at the moment, do you think there will be a new norm in the future at a much higher level? Or like Mike said, do you think we will just innovate and we will not do these roles anymore, we will do these other roles?
I kind of hope that we go down your path, and that we find, you know, things, and the unemployment rate through enhancements everywhere, you know, potentially is lower.
Awesome. Okay, cool. Well, Jarrod, thank you very much for your time. As we wrap it up, give us a plug for your podcast.
Oh, please come and watch Markets, Mystics and Mayhem. You'll have a few economists and a few guests talking about everything that's happening in the Kiwi economy.
Great. Okay. Well, thank you very much for joining us. Much love to Lighthouse Financial for sponsoring this episode. Please make sure to subscribe to the channel, give us a review, give us a like, and we'll catch you next time.
Cheers.